Good evening, everyone. My name is Paul. I'm just going to walk you through Canada employment analysis for October. So basically, the Government of Canada releases employment stats, basically November 6th or the beginning of each month. So in this particular case, it was November 6th. So what I want you to kind of look at is this particular graph that you're finally seeing that in the month of October, we finally have employment reaching 18 million Canadians are employed now. That's the highest level it's been in basically almost, as I said, in basically 5-6 years. So we've recovered all the jobs. We've seen some pressure in points in areas like the resource sector for energy, mining areas, whether that's quarrying in terms of nickel, iron areas in Newfoundland, offshore oil. We've seen some pressure where we've reduced capacity down there due to over demand, supply, and low commodity prices. So some of that pressure is there. The other thing you need to be careful with is the number this month of being 44,000. There's a lot of things that are coming into play there that are probably a short-term blip. It's not to say that we won't see job creation, but we may not see the numbers in the next few months because in October there was an election that was actually driving some of these numbers. Now if you look at this graph, it shows you the employment trend. We were up to close to 8% in 2010. We're down to a bit down below 7%. So we're seeing a little bit of an uptick in employment, but we're still doing pretty good considering where we came from prior to the recession. We're seeing the growth rates in employment slower, but we're still seeing good solid employment gains, which I will go into in future slides. Now this one gives you a good example in terms of the breakout of the major sectors, both between employees and self-employed. Now self-employed is a key area because that means these people aren't tied to companies. They tend to work on their own. They're like businesses. So if you see a shift in that, that means people are taking some risk to go on their own to kind of do things. So keep in mind that's a key area to focus on. Now this is the graph I want to spend a bit more time on. So what I've done here is I've overlaid employment with wages, because a lot of the conversation happens when you talk to the elections or talk to different people about job creations in terms of the jobs. So overall, since December 2014, we've created basically 292,000 jobs. Now let's stop there first. 25,000 of those jobs have been roughly in good producing. So you're probably saying, geez, that's not a lot. But if you pull away the onion and pull away the skin to get to the onion, you will see areas like construction, which pay decently, and you'll see manufacturing, which actually pays decently as well, are two areas that have had uptick in job creation. So that's a good area to kind of look at and focus on. Where we've lost jobs is in good paying jobs in the mining sector, and that's where you're seeing the 19,000 jobs lost. So that's why you got to take things with a grain of salt, because the commodity prices have driven down certain aspects of job creation, but other aspects of the economy picked up. Now if we had different policies, maybe at a provincial level in Ontario, that would encourage more investment in terms of automation versus taxation policies that Kathleen has chosen to do, that means is driving out FDI to coming into Ontario that would basically push more in exports. Now the only reason why Ontario is doing decently is the automotive sector is quite high, and exports going to the automotive sector from parts to actually finished goods are actually going to the US because the US economy is much stronger. The next piece I want to look at with this graph is 267,000 are service producing. Now service producing doesn't just mean retail stores, it doesn't just mean accommodations. It actually looks at all aspects from trade to basically financial services. That's why I put the wages here, so you can see where we've had growth sectors in terms of what they pay. So if we look at the retail trade itself, it's lost jobs, okay? And remember that the retail trade is a really finicky system here. We've seen Target close over the last few months. We've seen other impacts on retail. Plus e-commerce is becoming a bigger piece, which means more automation. So the jobs within retail are actually changing. So that's why I wanted to focus on that. Transportation and warehousing is a key area because that's part of the supply chain where we bring goods in and redistribute them. They're growing too because they're actually supporting some of that e-commerce issue. But then look at some of the higher paying areas where you see healthcare services, where you see professional services. We've seen good uptick in those jobs. So despite what the Liberal government says, we are creating jobs that are paying a decent wage. And that's the key thing I wanted to focus on as well with this chart. This is just a statement now from the Bank of Nova Scotia to kind of tell you what's happening, kind of give you an overview of the job gains. and it's telling you kind of a little bit of terms about the participation rates that we're basically down. We've actually come up in this particular case by a marginal tick, so we have a 2/3 participation rate, which is a positive development because that's some of the areas you want to kind of look at the overall health of an economy. And you're also looking at in terms of where the jobs are split, right? Over the last few years, a lot of the focus, say in provinces like Ontario, have been more growing the public sector, which is not sustainable. So you have to have the right balance of policies that are actually going to support private sector growth. And this just kind of shows you the trend line in terms of net employment since 2011 in jobs and also the employment rate. Let's talk about quickly what's going to drive things going in the future. In October, Canada elected a new government, a Liberal government. Its focus is a little bit going to be shifted. Now, they'll support a lot of the policies that Stephen Harper brought in terms of trade, taxation. However, they're going to focus on some key areas that are going to potentially influence job creation strategy. They're going to look at expanding more into green technology. Let me stop there for a second. Canada's already ranked top 10 in the world in green technology. So what the federal Liberal government's going to do is look at basically expanding the capacity to go more into that market. Well, you can go in year one when you go into green technology, but to get it to market might take 5 or 6 years. So there's a slow thing happening here. The other thing that they're going to revisit too as well is the stock options, which is part of the compensation that influences startups. That also may influence some of the impacts on how investment is going to be done in technology. So that's policies that you need to be very familiar with because these will drive in terms of how job creation will be done. I put the ORPP there because it's going to be effectively coming in 2017. Now, that being said, it's critical here because small businesses and business in general have already said they will cut hours or cut employees to do this. So that's going to have an impact on potential employment over the next few years. I brought in Alberta because their taxation policies from corporate to their support of the oil gas sector also will have a direct implication of foreign direct investment. So the reason why I put this is, despite the numbers are showing how we trend, there is considerable pressure on Canada over the next year or so, both with sluggish growth, both with government policies that may dictate how job creation happens going forward, not just 1 month, going into future years. Thank you.